Hey guys, it's Ken Finnan at Capital Advantage Tutoring again. My job to get you past the Series 7. So for the Series 7, there's a lot of vendors you can use. You can use STC, you can use Kaplan, Notman, Past Perfect, but I really like Achievable now. So I'm going to do exams so you can see how solid the questions are. I even struggle with some of them, and I know my shit. And I actually struggle with some of them, but you're going to go along with me and join the ride with me, and let's do this. So I'm going to start it up. Remember, this is achievable. I'll try to put a link somewhere so you can do it. If you really like it and you like what they're doing, they have so many fucking questions. I mean, seriously, they have more questions than anyone else, more than anyone else, and it costs about the same as buying the Q Bank from another vendor. And they got Brandon who does these videos. Brandon, he's solid. I'll definitely put a link to his YouTube up here, and if I think Achievable has one too. But seriously, if you want to try it out, you go in there, you log on, and you can actually get a free trial for a little bit. They let you try a couple sections, and it's really good. You can get an idea. So I'm selling it. I think it's good stuff. I'm starting to like it better than STC. Seriously. I love STC, but Achievable solid. Again, there's so many questions. The videos are good. They explain stuff in a really, really simple way that it's understandable. And they're cheaper than STC. Okay, look at my glasses. They're all okay. Let's do it. Okay, so here we are. This is the beginning. I hit start. See, I was letting it sit there, so the numbers are just screwed up on the time. It's unlimited time. You can take your questions as many times as you want, and very highly doubt you're ever going to run out. So let's get going instead of me just pushing. Let's start this, baby. Okay. A customer wants to place a buy order for 575 shares of Facebook stock at 187 or better. They want an immediate execution, but do not care if they receive all 575 shares. What type of order should be placed? Okay, so buy, stop, immediate or cancel, buy, stop, fill or kill, buy, stop, immediate or cancel, buy, limit, immediate or cancel, or buy, limit, fill or kill. Okay, so they do not care. So let's talk about this. So they want to buy shares at 187 or better. So to me, that sounds like a limit. So it's either immediate or cancel or fill or kill. So immediate or cancel means buy as many as you can and then cancel the rest. Fill or kill means buy them all or buy none. I'm going to lean toward immediate or cancel. We'll find out at the end, but I love it. Fill or kill means it's like an all or none, but immediate. They don't do a lot of those. An investor is considering an investment in preferred stock and is asking for your expertise regarding benefits and risks. Which of the following statements is false? So what's false? So what I do, when I sit down and take an exam, I write the word except or not or least or false or something on the paper. And then every time I see a question that has that word in it, I take my hand off the mouse and put it on that word. That reminds me that it's a false question, because you ever do a question and you forget halfway through? That happens to me all the time. I'm like, oh, go. And then I get it wrong because I forgot it was a false. So let's do this again. An investor is considering investing in preferred stock and wants to know the benefit of the risk, which is not true. Okay. Default risk does not apply. We'll come back to that. Individuals, investors may avoid taxation on 50% of dividends. No, that's corporations. Yields are higher than comparable bonds. That's true because it's more risk. And income is a primary benefit. Yes. And default risk does not apply. Yes, because it's not debt. I always struggle with that one because it's business risk. We're going to say there's no default risk. So yes, corporations get the 50% taxation reduction for dividends, common and preferred. So I'm going to go with B as my answer. Final answer. Which of the following debt securities is considered investment grade? 30% triple B. So really, once you're investment grade, just start looking for the thing. Triple B, triple C, double B, CC. So basically, what is it? Triple A, double A, triple B are all investment grade. Anything below triple B is speculative or junk or high yield. So I'm going to say triple B is the answer, baby. Okay. An 8.2% bond trading in the market for 1147. If this was a corporate bond, how would it be quoted? Okay, so it's going to be in fractions. We know it's a fraction. So let's find out. So it's going to be interesting. The way I would look at this is 147.50. So it's not half a cent. You got to move the decimal over. So it's really 114.75. 0.75 is 3/4. So I'm going to go with 114 and 3/4. And the reason, like, if you're not sure, look, one, it's not quoted on a basis. It's not here. Maybe you could figure that out. But these two, the 114.16, that's a treasury. Remember, decimals or dashes are always treasury. So these two are out. Okay. And then this one is not a yield thing. So it's going to be this 114 and 3/4. Love it. Okay. Feasibility studies will measure all the following except. So the feasibility study is done for a revenue bond to see if it's going to work. So let's see. Demand for the project, competition for the project. That's true. Facility costs. Issuer's ability to raise taxes. No, because the feasibility is for revenues. It's not about taxes, baby. Okay. Which of the following is true regarding a VA, baby? Okay. None of these. Should go with that. No, remember, always read all four choices. Life with period, certain annuities have lower payouts than joint and life survivor. I agree with that. Life annuities have lower payouts than life with period, certain. No. Joint with life survivors have higher payouts than life annuities. Okay, so let me do this. That could be a none. Well, life with period certain usually is maybe a little bit longer than joint and life survivor because that's two people. So I'm going to say this. So I'm going to say A is not A. We'll come back to A. B is not right. Life annuities, always straight life is always the highest payout choice. Remember that. And joint and life survivor have a little higher than life. So I'm going to go with none of the above. That's usually not an answer on the test, but we're going to go with that because it's all about learning, baby. It's all about learning. Okay. Which of the following options are combined for position limits? We do bull with bull and bear with bear. So let's do it. Long puts, short puts? No, because that's bull and bear. Bulls with bulls, bears with bears. Remember that. You like my half glasses? I should get my better glasses so I don't look like as much a fool. Here we go. I still look like an idiot because I'm just born that way. Long puts and long calls. So that's bull and bear. So that doesn't work. Long calls and short puts. Okay, long calls are bullish, short puts are bullish. I like that. Long calls and short calls. Oh, so let's go with long calls and short puts. Position limits are the amount of options you can have in any one side of the market. So if you have bullish options, they match up your bullish options with your other bullish options to determine if you're violating the limits or not. Or if you have two bearish, it's your bearish options with your bearish options. Add them together, and if you're over the limit, and it's a lot. I mean, it's not like it's 10 options, it's hundreds of thousands. Okay. How is a muni bond interest taxed for non-residents? So if I'm a non-resident, has exempt from all taxation? Nah. Subject to federal, exempt from state and local? Usually. Okay. Except subject to all taxation? No, because it's a muni unless it's AMT. Exempt from federal, subject to state, right? So if you buy a muni in a state that you don't live in, you're going to pay local taxes. Okay. If you buy it in your own state, you probably won't pay anything. So let's go with D as our final answer. Okay. Which of the following statements, I'm taking my glasses off, so it's hard to read because I'm fucking blind. Which of the following statements regarding covered LESAs and 529 plans are correct? Which of the following statements regarding covered LESAs and 529 plans are correct? 529 covers off different stock structures. We will come back to that. Probably not. There are no age requirements for covered, although there are because it's fucking run by the federal, so it sucks. Only covered high school, covered ESAs are paid for private high school. That used to be true, not anymore. And there are income phase outs for covered up. Yes. So 529 and covered up, they have the same structure. Goes in after tax, gross tax deferred. When you take it out for what you're supposed to, no taxes. There are age requirements. 18, you have to stop putting money in, and at 30, they have to use it. Covered L's can be used for private. No, some of 529s can now be used for sub college. And there are income phase outs because against the federal government puts crappy laws on everything. If you make over a certain amount, they start phasing out your ability to put money into it. Don't forget the max you can put in. Covered L is $2,000, not a real big limit on the 529s. On the same day in a margin account, an investor goes long an AXP Gen 75 call and short a 75 call. So this is so it's buy and sell, and it's the same option. So it's a spreadarama. When the market price is 85, who gives a shit? Which of the following best represents the sentiment of this strategy? So let's see. This is a I'm long a 75 call and short a 75 call. So the same strike, different months. So this is a horizontal / calendar. And I always want the longer option. So the longer option is always more valuable. So the Jan call is going to be more valuable. So this is a debit spread. Since it's debit spread, debit widen, exercise. Because remember, dead wives can't nag, debit widen, credit narrow. And then I think, okay, wide guys need to exercise because fat fucks like me have to exercise. So debit widen, credit narrow. So this debit widen. So I want it to widen. So it's either B or C. And I want to exercise since I spent money on the option. If it expires, I lose money, which is just a crappy strategy. So I'm going to go with C. Watch, I'll be wrong on all this shit. Okay. A client of yours is short an OEX 1190 call, which I sold months ago. Good for that. It is now expiration Friday and the OEX is 1288. So they're going to get nailed. They ask you what will occur if they are assigned the option. Remember, if you own an option, you exercise it. If you sold it, you get assigned. Okay. By the way, it's like 11:30 at night. I can't believe I'm doing this. Okay. What should you advise? They must buy different stocks. No, because index options, it's going to settle in cash. They must sell 100 stocks. No. They must pay 98 from the holder. They will receive 98 from the holder. So if you are short a call, you will have, and you get exercise, you will have to pay the moolah. You have to pay the in the money amount. And I'm not going to do that math. I'm assuming that their 9,800 is right. You have to do the difference between the strike price and where it's trading. So if you buy the option, the index option, and you exercise, you're going to get the money. If you sold the option, you get assigned, you're going to have to pay the moolah, the in the money amount. So I'm going to go with C. An investor is the holder of a 75 call after paying three options in a row. An investor is a holder of a 75 call after paying $11 premium. Several weeks later, the market goes to 97 and the investor exercises the option. What is reported to the IRS? Okay. So we bought a 75 call paying 11. So our cost basis is 86 because I can try to do math in my head. Don't ever do that. Several weeks later, the market goes to 97. The investor exercised the option. Oh, what's missing? He didn't fucking sell. He has a buy and a sell. So if there's no sell, you need a buy and a sell to have a gain. So capital loss is out, capital gain is out. Boom. So it's either cost basis or proceeds. Okay. So what am I doing? I'm doing 75 plus 11. That's going to be 86. So $8,600 cost basis. Remember, break even is going to be either cost basis or proceeds. If it's buy a call or sell a put, cost basis is break even. And if it's buy a put or sell a call, break even is proceeds. So I'm going to go with 8,600 cost basis. Remember, if you don't see a buy and a sell, you got nothing. All you have is a cost basis or proceeds. All the following is set by BOD. What's BOD? Board of Directors for a cash dividend payment accept. So remember, DERP, D-E-R-P, Declaration X, Record Payable. They don't set the X date because the X date is set by FINRA. And what is it? It's always the day before record date. So the X date is always the day before the X date. How do I know? So what does X date mean? X date means the day I don't get the dividend. How do I know that? Well, ex-boyfriend, ex-girlfriend, ex-wife, ex-dividend. What do they all mean? You're all lonely. Also, you have no dividend, no wife, no husband. Okay. Which of the following must exist in order for a mutual fund to charge the maximum sales charge on a sale? Well, to be a time lapse back to 30 years ago. But other than that, we need breakpoints. That's it. Because lower management fees, that's not a thing. Waiver administrative fees, they're not fucking doing that. An additional voting power, like super votes, like the Democrats, the super primaries, no. Super to yell at, no. You need breakpoints, you need letter of intent, stuff like that to charge the max. You have to have articles of corporation. So you need breakpoints, you need letter of intent, you need rights of accumulation, and dividend reinvested at NAV to charge the max, which is what, guys? 8.5%. Love it. 8 breakpoint. Boom. Okay. Which of the following debt securities, make sure I'm still recording because I would be killing myself if I didn't. Which of the following debt securities is considered investment grade? Again, so let's see, triple B or higher is investment grade. B, no, triple C, no, triple B, yes, triple B and higher. Triple A, double A, triple B. I love it. Okay. There are certain advantages and disadvantages for corporations when issuing equity or debt. From the issuer's perspective, which of the following is an advantage of issuing debt over equity? Okay, I read that and I don't even know what the fuck I read. Sometimes that happens, guys. And what you do is you just take a break, breathe for a second, and then come back and Check it. There are certain advantages and disadvantages for corporations when issuing equity or debt. From the issuer's perspective, which of the following is an advantage of issuing debt over equity? Okay. Well, must be repay the capital. Yeah, that's not a fucking advantage, though. Interest payments are legally guaranteed. That's true, but that's good for the investor. Bondholders are not giving voting rights. And all the choices. No, because we know the first two I read were not. So the fact that you issue debt means they don't have the vote. They can't kick your ass out. Good. How many times do you read about a guy? I mean, all these people that become, they start their company and then they get their asses voted out. I mean, look at Steve Jobs. He started the company and then at some point the board of directors kicked him out. They brought him back because they realized it was a freaking mistake. Which of the following pieces of data would be considered in a feasibility study for a muni bond? Finances, demand for facility, population growth, assessed valuation. Okay. Remember, isn't it great when you're reading the answers because you're worried? Likely, I'm sitting there, I'm on display, and I could look like an idiot here. Assessed valuation of properties in a muni. That would be for a GO, not a revenue. I love when I see the answer because then I can relax and I can breathe. Muni finances, yes, I care. Demand for facility, yes, we want to know if people are going to use it. And population growth, are people moving in or moving out? So assess valuation of properties in the muni, that would not give a shit. Okay. Which of the following statements regarding PAC CMOs is correct? So PACs are planned amortization class. They protect against both prepay and extension. So let's answer the question. Shut up, Ken. They don't offer any prepayment or extension. No, they do. I just fucking said that. They only offer extension risk. No, they do offer both prepay and extension. They offer prepay and extension. Manna from heaven. And they only offer prepayment. No. So the only tax TACs charge to only do prepayment risk. PACs do both. Boom, I love it. Okay. From lowest to highest, what are the order of the yields for a bond purchase at 104? Premium. So if I remember my triangle, so it's going to be, it's always left to right. Coupon, current, yield to maturity, yield to call. On a premium, that's high to low. And a discount, that's low to high. So it's a premium since it's 104 over 100. So I know the coupon is going to be the highest. So I have to reverse that. So it's going to be yield to call, yield to maturity, current, and nominal. I love it. That's going to be A. That's got it. Watch, I'm reading it. Yield to call is always on the end and nominal is on the other end. I like it. Lowest to highest, just making sure I'm going good. Always with those, don't do it as fast as I am. I'm just doing it because it's freaking late and I haven't even done it yet. $1,000 par. Can you believe people are emailing me and texting me stuff? $1,000 par, 18 years, 6.6% bond, which is callable in 10 years, traded it in the market at 106. So what is the current yield? Ooh, I get to do a little mathy math. Okay. Boom. Let's do some math. 6.6, so I'm going to do 6.6 divided by, where's the market? See, they get you. They want to make you do the 107, which I bet you that answer's in here. You're going to divide it by the current market price is 106, is 6.22. So let's find that. There it is, rounded up. So I bet you 107. If I did 6.6 divided by 107, yeah, it's 6.16. We couldn't have got it anyway. But that's where they trick you. Good stuff. 6.23. Good. A 35-year-old investor at the 24% tax bracket with a $500,000 portfolio wants high yield income as an investment objective. The current asset allocation of the portfolio is 20% stocks. Okay, that's fair. 40% growth, that's good. 20% preferred, 5% investment grade. Okay. What's most accurate? High yield income. So the problem is, it's high yield income, but he only has 20% preferred. So maybe we should change that up. Okay. Majority of the common stocks should be sold and reinvested in preferred. Okay. Majority of the growth stocks will be sold and reinvested in speculative grade corporate bonds. Okay, it's not C. So boy, I'm tough on this. So A or B. So he wants high yield. He already has preferred. So if he does majority, then he's gonna have all preferreds. I'm gonna lean toward he's gonna do some speculative. I mean, the guy's has. You don't need munis. That'd be great, but he's not the highest tax bracket. He's $500,000. There's a lot of stocks. So maybe he'll sell most of the stocks and put them in speculative grade. I mean, maybe I'm wrong, but the guy wants high. So I would lead toward high because preferreds aren't always high yield. In speculative grade, they give you a buck. I mean, maybe I'm wrong, who knows, but the guy can take risk. A short-term capital gain is a gain by on a security for, how long? Over 1 year. So we're going to go for Short term is over a year. So technically all of these are there, but it's the whole point is 12 months or less is short term. Under 12 months is obviously short term. But if you want long term, it has to be more than 12 months. So 12 months or less is short term. Love it. Which of the following considerations relating to FINRA's 5% rule? Number of customer complaints. Now it's about commissions. Market volatility, secured or unsecured, nature of the firm's business. No, I think it's going to be, I'm going to say market volatility, because the more volatile the bond, the more likely you're going to have to be harder to buy. We'll see. An investor goes short one CDE, just deck 110 call leap, which is, what is a leap? Over a year, which is close to 36 to 39 months. He sold it at 2. After holding the security for 13 months, the investor closes position at a premium of 7. What is the tax consequence? So we sold it for 2, bought it back for 7, so we lost $500, right? Now, here's the thing. They may say long term, but it's going to be short term, because short sales are always short term. So I'm going to come back. This is a tough one because nobody gives a shit if it's long or short, but a lot of people ask it. It's technically over 13 months, but long term is usually going to be holding an asset. So I'm going to go with a $500 short term gain. Easily could get this wrong because I'm torn on this, just like you guys will be, I hope. High yield bond funds invest primarily in what kind of security? Yeah, junk bonds, baby, because high yield means junk. It's not investor grade. It's not convertible, which I love convertible. They have low returns. Munis are just munis. I'm going to go with the junk of bonds. Okay. An affiliate may sell the maximum allowed shares as per Rule 144. How many times a year? Ooh, so remember this, 144, baby. Everyone does this. Anyone who tries to take credit for this fucking acronym is an idiot. It's just a scammer, spammer, whatever you want to call it. Shouldn't say scam, spammer. Shouldn't say any of that. I should just say anyone who decides to take it is fucking lying. That's what they're doing. Okay. An affiliate may sell the maximum allowed shares as per Rule 144 how many times a year? So 144, 1% of the asset, 1% of the outstanding, 4 weeks trading in volume, 4 times a year, baby. Every quarter, every 90 days. Not every quarter. It is every quarter. It's late. I'm getting punch drunk. How often are mutual funds required to send financial reports to their shareholders? I'm going to go with every 6 months. I could be wrong because I always fuck this up because I don't give a shit about this stuff. I'm going to say it's every 6 months. I bet you it's either every year or every quarter. In an investor's account, you find one short CVX May 65 put and one long CVX May 55 put. So this is 2 options. We're long and short. That's a spread. So no premium. They're just so cruel. So if it's a put, puts give you the right to sell. So the 65 put is a dominant option. So this is a credit spread. I sold this, which is attained to a transaction created a net credit of 475. The market goes to 61.50, and the investor closes the options at intrinsic. What is a gain or loss? Okay, so goes to 61.50. So that means the put goes for 0. Let me do this. I'll do the mathy math. Okay, 65 put, 55 put, net credit of 475. I always do the break even. It's the easiest freaking way to do this. So since it's a put spread, I'm going to subtract from the higher. I take the net. 65 minus 4.75 is 60.25. And I'm bullish because I sold a put. That's the dominant, because that's the bigger premium, bigger strike price than a put. So selling is bullish. So my break even is 6.25, 60.25. I need it to be higher than that. So it went to 61.50. It is higher than that. And 61.50 minus 60.25 is $125 gain. Fucking A, baby. Geo bonds can be paid off with all the following except assessments, fines. I'm going to go special taxes. Usually special taxes are for revenues. Good. Investors portfolio allocation. I hate these because these are I'm sure everyone else hates these too. Some people like them. I freaking hate them. Okay. 5%, because I always screw this up. 5% blue chip common stock, because the problem is you have to do what FINRA wants, not what real world is. An investor's portfolio allocation is 5% blue chip, 5% preferred, 7% treasury, so it's being really super safe, 20% short-term debt, so who's being safe? So I'm going to say safety principle. Ease. Well, interesting. I'm torn on this because in my mind, they're the same fucking thing. So preservation of capital, I'm going to go with. Dividend income is a primary benefit derived from which of the following securities? Well, we know that it's either dividends is common or preferred, and the primary benefit of the only reason you buy preferred is for the income. So it's going to be that. Good. The biggest difference between open-end and closed-end. This is a challenging test. The biggest difference between open-end and closed-end funds is the structure, baby. Because open-end, they sell shares all the time. Closed-end, they issue shares one time. Every time you buy an open-end, you have to get a prospectus. Wunderbar. An investor purchases. Hold on. Let's make sure I'm right. I'm jumping. Regulation, no. Management, no. Type of funds. No, we're good. Okay. I mean, it could be A, but see, I go with my gut because I'm not going to worry about it, even though I just went back. I just bought some tips. Inflation went up by 5%. I know that the coupon doesn't change, but the par value goes up. So let's do this. So the coupon adjusts to 5.25. No, the coupon doesn't. The par value does not change. The investor receives a par at maturity. No, because it went up. So it's going to have to be I'm not even doing the math on this. It's elimination. The coupon doesn't change. Coupon never freaking changes unless it's variable. Tips don't, they adjust the par, not the coupon. So A is out. So this one's out, and you don't get par. If it goes up, you're going to get whatever the new par is. Ooh, no, yeah. Oh, hold on. So let's see. So if I goes up by 5%, so what's 5% of? Yeah, that's probably right. So it probably is because I don't have to do an elimination. I was torn on the par thing for a second, but technically you get the higher of the principal of the par. So I'm going to go with that. So let's stick with it, but let's double check. So if I have $1,000 par and I go up, CPI is 5%, I'm going to do 1.05. That's 1,050 times 5% is 5,250. And that divided by 2, 2625. That's my answer. Because remember, the par value adjusts, not the coupon. So I'm going to stick with that. Good. A representative breaks a FINRA rule while performing a securities transaction for a customer. The customer is provided compensation for the mistake and is pleased with the result. What statement is true? The firm may be held responsible for the rep's actions. Yes. The rep may be subject to a censure, fine, suspension, revocation of the license. Yes. The representative is subject to the code of procedures. Yes. Even if the customer is happy, they still get in trouble. They could get in trouble. So I'm going to go with all of the above. An RR resigns from their position. What are you going to do? Follow U5 in order to pursue a career in another industry. What statement is true regarding their licenses? They must retake their license exams. Who knows? They will lapse after 2 years if they do not rejoin. I like that. The former employer can hold a person's license indefinitely. That would be parking a license. And they will lapse after 1 year. No, it's 2 years. So boom, boom. I love when I see the answer. Okay. Ooh, fill in the blank. Correspondence is a written or electronic communication sent to. Correspondence is 25 or less. Retail is over 25. So I'm going to say, go right here, 25 or fewer, 30-day period. Love it. Okay. Which of the following statements regarding an employee's registration is correct? Information provided on a registration form is not independently verified by the firm. All right. See, again, I'm getting tired. FINRA Form U5 registers. No, that's how you get read. FINRA Form U4 registers. Yes. Registration forms are submitted to the CQS. No, because that's a trading thing. So you do independently verify. So we're going to say U4 registers a representative. U5 is termination. U4 is representative. U6 is you got some issues. All the following are defined as affiliates except 10% shareholders of preferred stock because we don't give a shit about them. They don't have any voting right. I'm going to go with that one. Officers, partners, officers, directors, 10% owners. Yes. I don't think preferred stock counts. Voting stock. A $50 par, 8.9% preferred stock is purchased at a discount in the market. Which of the following statements is true? So we put it at a discount. Okay. The yield must be great, but equal to 8.9. No. The yield, so then we know, oh, hold on. We don't know. Yield must be lower than 8.9 because it's a discount. No, it should be higher. The yield will be higher because if you have a discount bond, it goes coupons are lowest, current, yield to maturity, yield to call. So they're all higher. On a discount, they're all higher than the coupon, and then a premium, they're all lower. Do I sound tired? I hope I do. I don't hope I do, but I guess I am. Liquidity risk is prevalent in which of the following scenarios? Liquidity risk. So liquidity risk is that you can't get out of it at a fair price. So let's see. Bond prices fall. That's a true thing that they do, but I don't know if that's liquidity. Bond prices thinly traded. That's the whole thing. Thinly traded means there's not a lot of shit going on. Bond prices due to fall due to rising inflation. No, that's inflation risk. Bond prices fall due to interest rate. That's interest rate risk. Actually, bond prices fall. That's not a true thing. A is interest rate risk. So I'm going to go with due to thinly traded market. That's usually small caps, thinly traded. Munis have a liquidity risk. TPPs have a liquidity risk. Hedge funds do. A client of yours owns a pass-through while interest rates are falling, which is like a Ginnie Mae or something. They are comparing the mortgage-backed security to another long-term bond they own. First of all, you can't fucking compare them, but that's fine. Which of the following is true? So if interest rates are falling, which one will move for more? That's a great question. I don't know, but I'm going to say market bond price because I don't think they're going to do that. But I'm going to say the bonds price will rise farther because it's not as immediate. I don't know. I'm going to go with that one. I could be wrong. Okay. What type of DPP is most likely to obtain income from its business line and pass through depreciation or losses? Well, it's not raw land. You don't get depreciate. Depreciation. I'm going to lean toward equipment leasing because depreciation is from admin stuff. Good. According to Rule 145, which of the following corporate actions do not require separate registration with the SEC? Stock reclass, I would say yes. Consolidation with another company, merger. I'm going to go with the stock split. You don't have to reclass it. You're just splitting it up. A new employee of a broker-dealer is filling out form FINRA form U4 to become a registered rep. What statement is true regarding the information placed on the form? You got to give their 5-year history. Resident? Yeah. Any felony or misdemeanor can result in statutory disqualification? No. Only if you were convicted in the last 10 years. Must sign a separate pre-dispute? No, because if you're working for a firm, you're doing an arbitration agreement, and they got to give the 5-year employment history. No, that's a 10-year. Like when I first started, I was 21. I based at 20, actually. I had to list my middle school. How fun was that? So, because that was 10 years before. Salt Middle School in New Providence. The employer must disclose their 5-year residence history. In order for a limited partnership to be registered with the state, paperwork must be filed with appropriate authorities. When all the necessary documents are processed, what is provided to confirm the legitimacy of the business? Certificate or agreement. So it's not the corporate charter. Don't know that it's the subscription agreement. So certificate or limited partnership versus agreement. I'm going to go with certificate. So certificate agreement is just listing what they can and can't do, but I think certificate is not about the rules, but it's about the paperwork and paying the fees to the state. So I'm going to go with certificate. I always suck with those paperwork shit. A client of yours has an account at your firm and has been doing business with you for the last 14 years. They trade several times a month, but plan on implementing a buy and hold strategy soon. How often must states be sent to the customers? It's every quarter. It's always quarter. There's no monthly. Okay. Which of the following terms always relate to GO bonds? Self-supporting? No fucking way. They don't hold your shit. Non-callable? We don't know. Callable? Yes or no? It could be. It's non-self-supporting because remember, GO bonds are for stuff that's free to use, so they're obviously not self-supporting. Good. If a stock dividend occurs, what best describes changes made to the cost basis on a common stock position? So stock dividend, it means we're going to get more shares worth less. So increase shares, no, and price. So it's going to be increased shares and decreased price. More shares worth less. Good. Okay. Which of the following investments is a RELP least likely to invest in? Oh, I think, interesting. I'm really torn on that. So they rent buildings. So apartment buildings, yeah, hospitals, yes, maybe a data center. I'm going to say Fannie Mae backed mortgages because they don't really invest in mortgages. They can provide funding for mortgages, but who knows? That's maybe my second one wrong or third one wrong. Okay, which of the following options are combined for position limits? We do the bulls with the bulls and the bears with the bears. So long calls, long puts. Ooh. Short calls, short puts. No, those are both that's bearish and bullish. Long puts, short puts, and that's bullish and bear, or bearish and bullish. Short puts, long calls. Boom, love it. Okay. After doing some research, you find one long 200 put at 1950 and a short September 80 put at 875. And the market price is 186. Break even or profit occurs at all following except. So we have to do break even on this puppy. So this is a spread. We have to do the math here. So we have to do 1950. Since it's a buy and a sell, we're going to subtract 1950 minus 8.75. That gives us 1075. Since it's a put, I'm going to subtract from the higher. So I'm going to do 200. So 189 and a quarter is my break even because I took it from the top. Now, my dominant is bearish. So anything below 189.25 is profitable. So anything above 189.25 is not profitable. So we're going to go with 190 because you're bearish. I got it. Okay. What is a common form of collateral for a collateral trust certificate? Usually it's going to be, see, they're going to say a subsidiary. I'll give you that. I'll give you that one. Because remember, mortgage bond is property, corporate property. Equipment bond is like equipment, and a collateral trust certificate is like securities. So I guess it would be a subsidiary maybe because the other ones don't make sense. All the following income funds except special situations are for like mergers and takeovers. So money market funds, they can pay a little income. I don't like it. Muni funds, yes. Preferred stock, yes. So I'm between A and D, but I'm going to go with special situations because that's like there's bankruptcies and stuff like that. So it's not really about takeovers. Leverage ETFs, high gain, high loss. So we're going to say reduce gains, no. Reduce gains, no. Magnify gains, but reduce losses, no. Everything's bigger. Leverage means everything's bigger, your gains and your losses. So you also have to put down more margin on the minimum maintenance, and hopefully we'll talk about that at some point. Charlie takes a $15,000 distribution from the daughter's covered LESA, but only uses 14 grand for educational purposes. What is the tax consequences? So she shouldn't have to pay taxes on the Okay, so there it is. So I was reading it and I'm just like brain dead, right? So no taxes due, no, obviously, because some of it did. 15 grand subject to taxes, 1,000, the math doesn't work. 15 grand subject to taxes, no. So 1,000 subject to taxes and a penalty. So you got to use it for college. Now there are exceptions if they have scholarships and stuff like that, but for this part, we're not going there. They didn't mention it. An investor calls you to it, refers to a news article describing a company repurchasing their own shares from the market. What would you refer to these shares as? They're the good old treasury stock. Interest rates rise while a client holds an interest-only CMO. What statement is true? So IO's interest-only loans, this, I don't know if this is testable, but it's good to know. So interest-only loans are the tranches, whatever that you put on the CMOs. So usually most bonds go inverse. So the problem is interest only, not a problem, but interest only and principal only loans, they go with the markets. So we're going to say an interest only loan will go with the market. So if rates rise, then I would say the market price rises also. I'm going to just say that's what I'm going to go with. Okay. Two short Jan Goldman 205 puts are combined with two long Goldman 185 puts. So that is a spread again, and it is a vertical spread because the strikes are different. Which of the following best represents a sentiment? So let's think about this. So I find the better one. So the 205 is better than the 185 on put world. So this is a selling a put. I am bullish, and that's a credit because sell, credit, buy. The dominant does everything. So if it's a sell credit, if the selling the put is a dominant, that means I'm selling it. And if I sell a put, I'm bullish. So it's a credit spread because I sold the dominant versus buying the dominant. So this is, if it's a credit spread, I want it to narrow. So look for the two narrows, the bottom two. And since it's money in my pocket, I want it to expire because I keep the money. I want it to expire. Very good. Good job, Ken. Geo bonds are backed by which of the following sources of capital? Property taxes, otherwise known as ad valorem. Which of the following is backing for a revenue bond? Not ad valorem. Corporate profits? No, because it's corporations. Federal subsidies? We wish. Revenues from the project. Love it. Okay. A representative wished to take a customer out to dinner, but the cost of dinner will exceed $200. Can they do this? Yeah, because fucking entertainment. It's fine. Entertainment, there's no limit. It can't be excessive. You can't take like a 25-year-old to the Super Bowl, but you can take them to a really nice dinner at Rayo's in the Bronx. Okay. A director of a publicly traded company has obtained a significant portion in her company stock. Okay. What should the director be most concerned about if needing to liquidate? No holding period, because control people don't have holding period and it's publicly traded. So that's out. Volume limitations and a 6-month hold. No, that would only be if you were a control person and it was an unregistered security. So I'm going to go with volume limitations only. 144, 1%, 4 weeks trading volume, 4 times a year, baby. Okay. Suitability related information provided by customers is used primarily for which of the following purposes? Effective advertising? Well, yeah, probably, but no. Making recommendations? Okay. Regulatory? Yeah, actually true. But meet Patriot Act. Patriot Act is finding out who they are. So I'm going to say, so you can make recommendations. You got to find out what they are, what kind of risk tolerance they are, all that crap. Good. NAV for a publicly traded fund is best described as none. It doesn't matter. So it's a guideline because publicly traded fund is technically a closed-end fund, which means it trades at market price, not the NAV. So it's really nice to know what it is, but nobody gives a shit. Good. Okay. All the following are associated with revenue bonds except ad valorem is for geos. So self-supporting they are supposedly. Debt coverage ratio, that's the ratio you use. Not subject to debt limits, yeah. You can only borrow as much as you think you can pay. So ad valorem. Okay. I think I'm almost halfway. See if I can do the whole thing in one sitting. It is midnight now, guys. An investor, so it's now a new day. So it's the 29th. An investor short one Microsoft 145 call and wants to create a horizontal call spread. So a horizontal call spread means the months are different. So we have to do a call spread. So we throw out the put A, and we have to make sure that the months are different, but the strike is the same. Because if they're both different, it's a diagonal. So let's throw out the 150 call because that doesn't work. Oh, there's only one 145 call. Love it. Because you're changing the months. Okay. What's the primary difference in open end and closed end? Open end we've heard of. Mutual fund, closed end nobody's ever heard of. So I would go with capitalization. That's what I'm going to go with. He said structure last time. This time I said capitalization. Ooh, an investor places a buy order for shares of CDE stock at 23.55 stop limit. So I'm placing a buy stop above stop limit. So it means it's going to trigger, and then I can only buy it at that price or less. Later in the day, the trading tape for CDA stock reads as follows: 23.50, nothing happens. 23.53, nothing happens. 23.52, nothing happens. 23.55, it triggers, but I'm not willing to pay more than 55. So 56 is out. It should be 23.52 as my price. Because if it was a stop order, 23.56 would be the price. But since it's not, 52, baby. Or a scroller. A new client of yours rolls over a brokerage account from another firm to yours. This is their current position. They have 30% S&P 500, 20% Russell, 40% tech. Oh, they're risky. Okay. The investor expects to desire for growth and income and is not willing to take a risk. So, man, he's got to get rid of some of that shit. Okay. Which should be your first move? I would, but he does want growth and income. Okay. I think, and maybe I'm wrong. Okay. But the problem is that tech stock is 40% of his goddamn thing is non-systematic risk. So I would say get rid of the tech stock and put it in a balance fund, and then you can start working on the other stuff. Okay. S&P 500 index, it's a small part. I think that tech stock company is way too heavily invested. Okay. Your customer is considering the addition of trading authorization to their account in order to give their daughter authority over their assets. Oof. They are currently contemplating whether an act is full or limited. What statement regarding the authorized agent's activities while utilizing limited trade authorization is false? So it's not true. See, I take my hand off, I put it in the word false. Limited trading authority allows the agent to borrow funds on behalf of the account owner. Okay, well, that's probably the answer. Limited allows sale of naked calls if it's allowed. LTA allows the purchase of stock. Yes. There's no limited trading authority doesn't tell you what you can and can't buy. It just tells you what you can and can't do. And limited trading authority allows withdrawal of cash from the account. Okay, so A or D? Oh, so duh, I'm an idiot. So A is actually margin, so that's fine. So it's going to be D. Sometimes I screw that up. It's late. Okay. A client of yours inherits securities. I was only going to do 50, but I think I'm going to push through. A client of yours inherits securities from their late father. Which of the following statements is made to the client are true? A client of yours inherits securities from their late father. Which of the following statements are client are true? Securities reflect a stepped up basis and retain the original holding period. Okay, we'll come back to that. Securities reflect the original basis. No, because the guy died to get it. Securities at original basis. No. And reflect stepped up. So a couple of things on the Series 7 and the SIE and the 6 and all that stuff. Remember this, okay? Securities reflect a stepped up basis, which means if the person dies, they step up the cost basis and everything becomes long-term. If I give you as a gift, well, whatever the holding period is, it is, and they don't step up the basis. So again, for the 7, you need to know that when somebody dies, stepped up basis and everything becomes long-term because they figure, hey, he's dead. He's probably not scamming us. Customer purchase is $1,000 par 8% bond at 113. So we bought it at a premium. What's the current yield? Let's do this. So it's an 8% bond. I'm going to get my handy dandy calculator. So we have $80, say, divided by, I'll just do 8 divided by 113. Of course, if I actually did the numbers right, that would help. I got 7.07. What do you got? So it looks good. I like it. Let's go with the 708. I like it. Guys, again, this is achievable. This is some solid shit. These are great questions, really challenging you. And I can go through all this and I'm probably not going to have to worry about seeing the same question over and over again. So this is awesome. Okay. Okay. I love it. All good. Okay. So again, use Achievable for the Series 7, SIE, and the 63 exams. I love these guys. And they're super nice and they respond. And Brandon has good videos and he has his own YouTube channel. An issuer and an underwriter agree to a firm underwriting commitment of 25.1 million shares. If the underwriter sells, oh my God, can you make it any harder? Okay. So firm underwriting, which means I'm promising to pay. If the underwriter sells 15 million, which the following is true, I promise to pay him. So the unsold shares are the underwriter's liability because I promised to buy them because that's firm commitment. If it was best efforts, it's on you, the issuer, not the underwriter. So any unsold shares are the liability of the underwriter. Making me think with these options. Love the spread. So there's, again, it's a spread because we sold puts and bought puts. Okay. So is this a debit or credit? So, I don't even have to do the math really. So I sold for 19 and bought for 950. So I sold for more than I brought in. We have a credit. That means I wanted to narrow right away. So it's either B or C. And if it's a credit, I have money in my pocket. I'd love it to expire. So I keep my money. I hope I'm doing okay. I'm a little worried. An investor goes short an MMM 140 put and short an MMM 140 call. Oh, it's not a spread. It's a straddle because I sold both and it's a call and a put. So I want narrow. Premium is 750 and the market is 141. I don't care. The market goes to 144 and the contracts are closed for intrinsic, which again, a loss. I just do it this way. So combined premium. So it went down, right? The market goes to 144. Oh, that's not so bad. So if it goes between so if it closes in between the two strike prices, it expires. And if it's a long straddle, I lose money. But since it's a short straddle, I'm going to gain it. I'm going to gain 750. That's all I'm doing because they both expired. That intrinsic stuff doesn't matter. Okay. Because there's no intrinsic at 144. All the following terms relate to mortgage bonds except real estate, full faith and credit, collateral secured. Ooh. Full faith and credit. Ooh, wait a second. They are secured. They are collateral. They are real estate. Full faith and credit, that usually means a debenture. I could be wrong because I'm overthinking it or underthinking it, really. A customer of your firm goes short 1 TUV October 110 put at 5 and the market bid is 107. I don't give a shit where it is, ever where it is. 7 months later, the market goes 85 and the option is closed at intrinsic. So let's do this. So first of all, we close it, so we have a buy and a sell. So let's see. So we have a short at 110 put at 110. So we have 105 is our break even. Then we minus 85. So that's $20. So it can't be anything. I did one. So it has to be $2,000 loss, right? So I sold a put at 105. I'm going to have to buy the stock at 110, sell it at 85. I'm losing that 25 plus minus a 2. Boom, capital loss of $2,000. Again, what I did was I figured out the break even. I always go by the break even. Okay, so 110 minus 5 is 105. 105 down to 85 is $2,000 or 2. Okay, 20. Good, love it. I'm babbling. Which of the following is considered a joint account? There we go. Okay, joint account. So partnership, no, that's just a partnership. Custodial, no, because it's a parent and a child. No. Transfer on death, that's an adult and somebody they decide they want to give all their money to. Transfer in tenants in common is the answer. Good. We're rushing through the series 7 here. I love this. This is awesome. I'm more than halfway through. Hope you guys can hang with me. It's a little over an hour. And I'm not cutting this shit. I'm not going to edit it. I'm just going to put a little thing in the front and the back to entertain you. And then we're going to go. Unless I screw up in the next 20 minutes. Which system provides financing to farmers? This is the problem. I freaking hate these. I have such a blind spot for this. I mean, I think it's a federal farm credit union, but I swear to God, this is the one thing that kills me. The farm credit shit just bothers the hell out of me, and I just refuse to learn it. Offerings of securities in one state are exempt, which of the following? So whenever you do something in one state, it's exempt from SEC registration. It's called qualification if you've taken the 63, and it's a Rule 147, hopefully, in on our level, on the Series 7 level, on the Series 7 exam, it's going to be 147, which means you're still subject to the anti-fraud rules, but you don't have to register because you're in one state. A dispute, I know where we're going. A dispute arises between a firm and a customer, which is presented and eventually resolved through arbitration. All the following terms are associated with arbitration acceptance. Okay, public hearings, public disclosure. Okay, so it is formal. We know that arbitration is binding. You can't back out of it once they decide. They try to send you to mediation first, but it is what it is. They are not public. Everything's held in private, but when it's done, they will usually disclose the stuff. So I'm going to say it's not public. I'm going to say it's private. Good. Okay. Investors long 300 shares of ABC stock at 20. ABC company performs a 1-for-3 reverse stock split on Wednesday the 12th, which is the following is true. So if you own 300 shares at 20, they reverse means you're going to get less shares worth more. So now you should have less shares. Let's do this. So I do 1 divided by 3 first. 1 divided by 3, that gives me 0.33. So I'm going to do 300 times 0.33. That gives me 99 shares. And then I'm going to do 20 divided by 0.33. That gives me 60. Okay. Okay, so let's do this. The X date is 11. No, it was after. Investment on 200 shares after stock split. No. The stock split only requires approval from the board of directors. No, that's not true. See, this is a tough one because it's 60, but I'm going to go with the $60 just because it's probably averaging out. I'm going to say that works. Who knows? That's going to be definitely one I got wrong. A sell limit at, sorry about the cough. A sell limit at 63 could be filled at all the following prices except, well, you sell it at or higher. So it's 63, 64, all the way up. So 59 does not meet that. If it was a buy, then it would be. Good. Okay. Class B shares are associated with the following. Usually the 12B ones should be higher than A because you're paying for it, but they're not going to be higher than C because you're not paying anything to win. So they have to get some money from you. So the marketing and advertising fees should be higher than A because A, since you're paying up front, you're going to pay less. All of the following should be reported to the IRS as earned income except for 25 grand in tips. Ah, funny. Okay. Interest, because that's passive income. It's not earned. You still have to report it. It's not earned. Good. Same thing with the direct investment in real estate is considered passive. Which of the following orders are placed below the market? So slobs over bliss. So buy limits and sell stops. Boom, there it is. Hey, look, that's so freaking easy sometimes. Which of the following features do all variable rate demands not contain? Do they have a call feature? No. They have a put feature, definitely. The fixed coupon, no, and the variable principal, no. So variable rate demand obligations, what they do is the interest rates go up and down based on current rates, and they have an embedded put option, which means at any point you can sell it back to the issuer at par, which makes it a long-term product that acts like a short-term product. Very good. Which of the following is a requirement for a tax-free interest sum in muni bond? Residency. You have to live in the state. I'm hoping that's the answer. I'm going to be obnoxious, and I may be wrong. Which of the following is true? Full power of attorney allows trading authorization only. No. Limited allows withdrawals. No. Full power of attorney allows withdrawal only. Limited power of attorney allows trading authorization only. So limited lets you only trade. You can't touch the fucking money. Good. Oh, the portfolios. I really hate them. A 50-year-old investor with $3 million portfolios, you can freaking play. Specifies tax advantage income as their investment objectives, the current asset allocation of their. They got 25% muni. Maybe they wanted to. Okay. Oh, interesting. So D is no. A majority of the stock should be sold and reinvested in money markets. They don't want that. A majority of the non-dividend paying stuff be sold and reinvested in long-term munis. He does want. He specifies tax advantage income. Okay. I think you could do that. I'm going to either go with A or C, and I'm really torn on this because it should be sold a majority into not money markets. Yeah, because he wants income. So I'm going to say that. I'm going to say the non-dividend paying stocks should be that because he wants income. He doesn't love growth. I like it. Okay. The register rep fails to complete their CE. What is the registration status? They are CE inactive. And you have 120 days from your date to do that. Okay. Which of the following plan types do ERISA rules and regulation apply to? They should be for private company plans. Good. The tombstone contains all the following except name of the underwriters, it does, net proceeds offering, name of the issue, estimated POP. I'm going to go with net proceeds of the offering. I don't like the POP part, but I also don't like what the net proceeds is because they don't know what's coming out. Okay. A long AMD Jan 65 calls combined with a short 65 call. So that is a spread. And since a Jan 65 call, it's going to be a debit spread because a longer month is always a better option. This is a horizontal, so it's going to be a debit spread. So I want a debit call spread. So it's technically it's a long call spread. I like that. It's not a credit call spread, not bad. I'm going to say with long call. They don't always use the word long, so I could see it being tricky. None. I'm going to go with that. The customer calls you asking to discuss the possibilities of opening a partnership account. To open an account, which the following must be submitted to the firm. Hypothecation is for margin. Partnership agreement is for partnership. Okay. Corporate charter, corporate resolution is not the answer because they don't have, partnerships don't have that. It should be the partnership agreement. Love it. Okay. In an investor's account, you find one long CVX April 60 put and short of 60 put. So that's another spread. Which of the following represents a sentiment of this strategy? So I'm long the April, which is better because it's farther. So I'm long a put, so it means I'm bearish. Got that. That means it's a debit, so I want it to widen, so it's either A or D. And since I spent money, I want the option to exercise, not expire, so I'm going to go there. Okay. Client here is asked for the current yield on a $25 par 3.25% convertible preferred with a conversion price of $12.50. They purchased the shares at $30. What should you tell them? Tell them what the fuck are they doing? So we have okay, trying to trick us a little bit. So the $25 par, you do 3.25% of par. It's like 81 cents or something like that. And then you're going to do that divided by the market where they bought it at 30. So you're going to do 81 cents divided by 30. It should be 2.708%. I hope I'm right. God, I hope I'm right. I'd hate to be embarrassed. Okay. Because that should be an easy one. Which of the following regulatory bodies has the power to create and amend rules, but no enforcement power? So FINRA, no, they can definitely enforce. SEC can. NASA, ooh, they don't really, I guess they can enforce. But MSRB, they definitely write rules, but they don't enforce. FINRA and SEC does. I'm torn on that one. Okay, in an investor's account, use your shortest 70 call and long 80 calls. So again, we're short because it's a credit spread. Creating a net credit, oh, there it is. They already tell us 4.25. So let's do the break even. So the break even is going to be 74.25. Since it's a call spread, we add to the lower. So my break even is at 74.25. And I am bearish because the dominant is a selling a call. So I'm bearish. So anything below 74.25 is a win. Anything below 74, anything below 74.25 is a win. Anything above 74.25 is a loss. So they're going to lose at 76.25, 74.50, 75.50, boom, 72.50. Good. Okay. Which of the following statements is false? Okay, OIDs must accrete. Remember that OIDs you must accrete. So new issue muni bond sold at a discount must be accreted. That's absolutely true. New issue bond sold at a discount must be treated. Yes, all OIDs you must accrete. New U.S. government bonds sold at a premium must be amortized. No, because only munis need to be amortized on the premium side. New issue muni bonds sold at a premium must be amortized. So the answer is going to be C, because OIDs you must accrete. OID you must accrete. And then premium munis you must amortize. Other than that, it's all a May. So I'm going to say the government is not considered a muni. Ooh, we're question 101. We're only 34 away before I fall asleep. A married couple meets with you about the potential of opening accounts at your firm. I bet you I'm going to do really bad in the last 35. See, it's a setup. I try to make it sound better, but I am exhausted. A married couple meets you. See, I can't read. A married couple meets with you about a potential of opening accounts at your firm. They want to open an account that offers both access to the assets and trading capabilities. In the event of passing of one spouse, a specified portion of assets should pass to the children who are listed as beneficiaries in the will of each spouse. What account should you do? So that's interesting. They try to trick you, but I do think it's joint tenants in common. It could easily be right to survivorship because they're saying we'll do it in the will, but they said they wanted to go to the children. Just because they're beneficiaries in the will doesn't mean anything. Tenants in common means it goes down to the beneficiaries, to the state, to the children, to the heirs. Right to survivorship goes to the other person. Financial firm performs a trade in a broker capacity. How will they be compensated? My verbal is going to get worse and worse because I'm trying to get through it sort of quickly. ABC, agent broker commission, boom, principal dealer markup, PDM. So I'm going to say that if it's a broker, it's a trade. ABC, it's consumed. Which of the following allow for tax-free distributions in retirement? That's easy. Roth IRAs don't pay taxes, okay? Traditional 401ks, 403bs are qualified, which means you pay tax on everything on the way out. A 69-year-old retiree at the 24% bracket, or it's a simple IRA. While they were employed, they contributed a total of $700,000 to the plan. Hell of a smart person. The account grew to 1.2 million. This year, they take distributions totaling $35,000. What is their tax liability? So watch, it's going to be a tricky question, but I'm just going to go with the straight up regular and if I get it wrong, I get it wrong. I'm like, okay, so they take out $35,000 times 0.24. They should owe $8,400. And if I'm wrong, I apologize. Customer requests for the representative to hold their mail. You can always do that. including statements and trade cover, which is really all they're going to hold anyway. They plan on having the firm hold the mail for 4 months, which is the following valid reason. We'll just treat family trip around the world. A is no, customers' mail is being stolen. Interesting. Okay, so I still would go with the family trip route because I think that's okay. But I think if the customer's mail is being stolen, that's probably the best choice. Customer goes long. 1 Feb ticks call at 3 when the yield of the 30 is 3. Okay. What did they pay for the opening purchase of this profit thing? It's $300. So $3 premium, $300. Maybe I'm wrong, but that should be the answer. It is because you're buying a treasury interest rate option. Good. Investor owns a significant amount of Australian dollars. Is he concerned about the currency weakening? I'm worried about the foreign currency going down. If they want to hedge against currency exchange risk, which are the following options. First of all, you cannot buy on the US dollar. We know that. So you're worried about the Australian dollar dropping. So you're going to buy puts. Should be the answer. Which of the following investor profiles is most likely suitable for a hedge fund investment? Rich people. That's a great question. Most likely suitable. I go with the richest person in the world. I just go with rich. I mean, it could be the 750, but I'm going to go with the 1.5 million. I always go with the rich person. Which of the following are similarities between rights and warrants? Time value of issuance. Ooh, hold on. Right to buy stock at a fixed price. That is absolutely true. Intrinsic, one of them has it. Issued to prevent dilution. That's one of them. Time value, some have it. Warrants will have a lot of time value, and rights won't have as much. So I'm going to say right to buy stock at a fixed price because both of them give you the right to buy at a fixed price, but one gives you the right to buy at a discount now, another one is at a later date. RR writes up a thoughtful letter offering free financial analysts to help our customers save enough for retirement. How sweet. The representative runs a letter by several colleagues and they all give her good feedback. She immediately sends a letter to 36 retail customers. Oh, what statement is true? The communication kept on 3 years. That's a true statement. Communication should have been pre-approved by FINRA. No. The communications correspondence. No. The communication did not require pre-approval. No, it did. So I'm going to say you held on to it for 3 years. Most shit's 3 years. Except for big secs, blotter, general ledger, stock records, customer information, and customer statements are 6 years. An investor becomes the writer of an ABC 45 call when the market is 51. The option is traded later at a higher premium. What are the tax consequences? To be capital loss because you sold it and then bought it at a higher premium. So that's a loser, capital loss. Oh, hold on. Ooh. The option is traded. Good. Just make if it said the stock was trading higher, then you might just have a cost basis. Okay. Or proceeds. The CFO of a publicly traded company believes that their stock price is too low and wants to immediately fix the problem. Which of the following would they likely pursue? I reverse stock split. Marking the close, marking the open is violation. A stock split makes the stock lower. Reverse is usually a sign of a dead company, but whatever. Okay. A registered rep resigns from their position in order to pursue a career in another industry. What statement is false? Okay. Sorry at the bottom. Firm is notified within 10 days of employee's resignation. It's 30 days. FINRA retains jurisdiction over the rep for 1 year following the resignation. FINRA form U6 is filed. So I would say 2 of them are wrong. So I'm going to go all these choices once. I'll be freaking wrong. But I know it's 30 days. So client of yours buys 600 shares of ABC stock at 55. Year later, the share sold at 32.26, 32. 26, I guess he sold it. 26 days later, they buy the 600 shares of ABC stock at 26. What statement is true? Okay. So this is a wash sale. So the realized loss is disallowed because they do adjust the cost basis, but it won't be 26. It'll be 26 plus the 22. So it'll be like 40 something because you add the loss onto what you. So if you get not convicted, if you have a wash sale, Whatever you lost when you sold it, they will add on to your cost basis when you buy it back. So you can't take it now, you can take it another day. Oh, we're down to 20 left. Okay. Which of the following is false about MSRB? MSRB rules do not regulate issuers. That's true because it's only about bank dealers and because issuers are states, which are exempt from federal law. MSRB is enforcement authority. We will come back to that. We know we will. MSRB rules regulate muni bond sales. That's true. And they have rule writing capability. Yes. So the answer is they can enforce. They don't. It's FINRA and the SEC. A client of yours finds shares of preferred stock they would like to invest in. Prior to making the investment, they ask for your thoughts on the investment. Which of the following statements regarding preferred stock is true? Capital appreciation is not possible. No, because if rates go down. Higher priority than subordinate debt debentures. No, because bonds come first. Although it shares many similarities to debt securities, it is an equity. I agree with that. Income is a secondary benefit. The only reason to buy preferreds is for income. We just have to check to make sure I'm actually recording. Okay. Which of the following laws governs a primary market? 33. Investment come back to 40. No, that's mutual funds. Uniform Securities Act. That's for blue sky state laws. Act of 34. That's for secondary market. That's the MISPERMs, which I've done a video on. Put there. And Securities Act of 1933. That's for IPOs. So that's a primary market. All of the following are part of the first market except there's no more Boston and Chicago. Pink sheets are second market. In the secondary market, there are 4 markets. First market exchanges, second market over the counter. Third market is over the counter trading of listed securities. And fourth market is like the institution order matching, which is dark pools and ECNs and stuff like that. So pink sheets are part of the second market, not the first. I know I'm going to make a couple of stupid mistakes here. I'm like now that we're getting near the end of this Series 7 thing for Achievable, I'm a little worried. Class A shares of an open-end management company are suitable for what type of investor? Short-term, no. Short-term, no. Long-term, yes. And larger purchases. Why? Because Class A has breakpoints. The more you put in, you get a big discount. I feel I'm going to earn my steak dinner tonight at 1:30 in the morning. 12:35. Prime brokerage accounts are likely to receive which of the following benefits? Superb investment advice? No. SEC, SAC? No. Lower interest charges on borrowed funds? Okay, I'll give you that. So you're not going to get superb. You're not going to get less SEC oversight. I'm thinking it's going to be low interest. I can't see why it's anything else. If a municipality's residents are concerned about taxes and may not approve a bond due to fear of rising taxes, what type of bond may they issue? Maybe, a limited tax bond, right? Because you're limiting how much tax you can do. Boom, love it. Sometimes I'm tired. In an account, an investor is long a MOO 70 put when the market is 76. They want to create a long spread. So we know that if it's a spread, it has to have 2 calls or 2 puts. So we throw the calls out, the A and C, 80 call out. So we want a long put spread. So the long put spread, we want the long one to be the dominant. Since a 70 put, it has to be the higher. Remember, so a put gives you the right to sell. So the higher strike is the dominant on the put. So that means we want the 70 to be the dominant, which means we have to sell a lower put. So we're going to sell the 60 put to make it a long put spread. Love it. In an inflationary environment, what will tips investors receive at maturity? Adjusted par value minus CPI, adjusted par value. See, that's where I think I'm wrong on that other one. So I'm going to go with that. That means I'm definitely wrong on that one. Submitting contrary exercise advice to a financial firm prevents which of the following from occurring? Submitting the CEA, I've never heard of it. I should have. To a financial firm prevents which of the following. So I guess, so contrary, so it means that maybe I don't want it to exercise. So prevents which of the following? Automatic exercise, right? So if you give I guess if you give contrary and exercising advice, you're saying even if it would be exercised, don't fucking do it. Okay. Which of the following portfolios are suitable for a 60-year-old with low risk? Okay, so I don't want a lot of equity, right? So I don't want a lot of equity. 42% long-term, 68-year-old. Yeah, you can't give them short because they're going to last a while. So, oh, it's one of these two, 42% short-term, but yeah, you can't because he's 60. You have time. I think it's A or C, so we'll find out. Uh-oh, how'd we do? I got a 96. Let's see which one I got wrong. Let's go ripping through with it. Okay. I want to see which ones I got wrong. And the reason I'm not stopping on all these is because we've talked about them. Okay. Did I click the wrong one? Which of the following that would be considered in a feasibility study? Maybe I did least. Well, that's crazy. That's crazy. Okay, I get it. Feasibility study is for revenue bonds. I know this. I don't know how I screwed that up. Maybe I clicked the wrong one. I'm going too fast. I'm so stupid. Because I must have totally read that wrong. Because I know that feasibility study looks at everything but the assessed valuation. That's what happens when you go fast. Speed kills, babies. Speed kills. Which is 5% rule. Okay. Sometimes I get them wrong. That's too wrong. So they're saying that these are the lists, right? So type of security, available security, nature of the firm's business is part of it. I guess so. Okay. I'll give it to you. See, I told you I would be flipping it, that it's a short-term loss. Hold on, wait a second. Did I pick capital gain? I'm going to go back and check that. I knew it was a loss. I think I said it was a loss. Oh, that drives me so nuts. See, slow down, Ken. Don't do that. I could have had a 98 if I didn't make two stupid mistakes. Guys, use this as a warning. It is dangerous to go fast. Don't go fast. See, I always screw this up. I think they're the same thing. Okay. Let's read this. Capital preservation is the least risky. Safety of principle, I guess, basically, you're willing to take on some shit. I disagree. I think but it's fine. It is what it is. Nobody's going to be perfect. No, I got so many wrong in the beginning. How many more are there left? I can't even keep my eyes open. Okay, we're moving along. We're moving along. Let's find this shit. At least you can see the answers and you can go along with it. Remember, guys, so what you're going to do is you're going to, did I get that wrong? No, we got it right. Okay. Had a nice run. You guys can slow this down if you want to see the right answers. But I think I explained most of it. Even the ones I got wrong, I think I freaking explained it. Makes me so mad. No way I got the last 80 right? I got to get one wrong at the end. Oh, there it is. Okay, guys. So that's the end of that. So again, thank you for joining in. I love it. Guys, if you like what I'm doing, I thought I'm probably going to post this on a Tuesday, and you can come to my live tonight. We can talk about stuff, ask anything you want. It's a live back and forth like this. It's not just typing into a thing and hope you can understand the answer. It's live. Come and ask any question on any FINRA. Guys, thank you very much. Have a great night.